Norwegian Cruise Lines is one growth stock down 80% that I think you might regret not buying on the dip. I'm going to talk about why I think that's the case in this video, so stay tuned. Beginning with revenue, right? Sales absolutely crashed for cruise lines after the pandemic. They were forced to shut down. And so for Norwegian cruise lines, it was no different. Revenue went from over $6 billion dollars all the way down to a little over, I would say, down to $1 billion dollars. And it has yet to recover. The company is still not back to its long run trend, right? Even though it's rebounding strongly, it went from 1 to 4.8 billion really quickly, but it's still not back to this level. So it's got more room to recover, and it looks like it is going to recover even stronger than where it was before, because industry wide travel companies overall have all increased prices. I would say at least double digits. When I'm looking at across the board, I cover about 15 or so travel companies, including companies like Hilton and Disney and uh, Carnival Cruise Lines and all of those. They've on average increased prices by double digits. So you've got, even if you get the same amount of customers that you were getting in 2019, your revenue is going to be roughly 10% higher because you've increased prices. So for that reason alone, even if they just get back to existing customer levels, revenue will be higher. But I think that revenue is going to be even higher than that because there's all this pent up demand. Because for about 2 years, that's one of the things we spent the least amount of money on is travel. We were spending so much time indoors. These things were canceled, closed, temporarily shut down. Uh, Restrictions because of COVID made it so inconvenient to do cruises and travel and all of that. So right now, people are making up for that. They're making up for that lost time, taking vacations, traveling, doing all that. And there's a lot of room to expand here. And looking at Norwegian Cruise Line's operating income, the company was very nicely profitable, right? Growing its operating income all the way close to 1.5 billion in a trailing 12-month period. But of course, again, because of the pandemic, it crashed, and now it's recovering, but it still lost 1.55 billion in its most recent trailing 12 months. It's improving. I suspect it'll continue improving. But more importantly, I would look at the cash flow from operations. In this metric, the company was also doing very nicely, generating nearly 2 billion in cash flow from operations every year. 2 billion on revenue of 6 billion. 2 billion of it was turning into cash. So near 33% conversion into cash from operations on sales. Again, these cruise ships are very lucrative, right? They cost a lot of money to create and build and operate, but once you got it going, they're very lucrative. And so that's why, one of the reasons why I say you might regret not buying this right now. It's in the aftermath. The bad news is behind it, good news in front of it, and you could see it in cash flow from operations. It went from, it crashed, but now it's back positive, 210 million in cash flow from operations over the trailing 12 months. That's only going to get better over the near term and the longer term. I suspect it will return to these levels, if not higher. As you could see, it was on an upward trajectory. Now remember, cash flow from operations is going to be way better than profitability for cruise ships because they've already spent the money to build these ships. That's in the past. They already put up that cash. So now when you go to on a cruise ship, that a lot of that cash is flowing just, straight into the bank because it doesn't need to spend all that much money to serve those guests that are on board those cruise ships, right? So unless it spends money to make a new ship, to commission a new ship, this cash flow from operations figure is going to recover back to $2 billion in a relatively short amount of time. In a relatively short amount of time, which is really good for this company because one of the bigger risks for Norwegian Cruise Line is all the debt that it had to undertake to survive during the pandemic. It had to borrow a lot of money. Its total long-term debt went from 6 billion all the way up to 13.6 billion. So that's a big risk. That's a big risk for this company. But the good news is that cash flow is positive, so it can use a lot of that money to pay down some of that debt. And when it gets back to this level, 2 billion in cash flow from operations annually, in a few short years, it could bring this back down to the 6 billion level. Let's say it allocates 1 billion of the 2 billion every year to pay back the debt. It can bring it down in about 5 years, which I hope it does. I hope it does allocate a lot of its cash flow to pay down the debt, because this debt is at a high interest rate. So as an investor, I would like to see them pay this debt down as soon as they can, as soon as this cash flow from operations starts to increase. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the final reason why I think you might regret not buying this stock now is because of the favorable valuation. Norwegian Cruise Line is selling at a forward price to earnings of 17. It's near the cheapest this stock has traded for all year, and it's got really good prospects ahead over the next year, 2 years, I would say. It's got really good prospects. Remember, travel spending crashed, right? I'll give you one statistic here. According to Statista, hotel and resort spending fell from 1.5 trillion to 600 billion in 2020. $900 billion crash. Now that recovered slowly, right, to 900 billion in 2021 and to 1 trillion in 2022, and estimates suggest it's going to go to 1.1 trillion in 2023. So it's still below where it was before the pandemic. So spending on hotels and resorts, which I use as a proxy for, vacation travel spending, it's still below where it was before the pandemic, even though that's where people are increasingly spending more and more on, right? So there's still room to grow, and I suspect it's going to recover even higher than where it was before the outbreak because of the pent-up demand. So for all those reasons, I think Norwegian Cruise Line is one growth stock you might regret not buying on this dip here because of everything I mentioned. Thank you so much for watching. I know there's a lot you could be doing with your time nowadays. There's so many entertainment options, and you chose to watch this video. I sincerely appreciate that. So I'm not going to ask you to subscribe or hit the like button or this or that. I'm just going to thank you for watching this video, because that's enough for me. I really appreciate that you did that. So thank you. Thank you. I sincerely appreciate it. And I really hope I can see you again sometime soon. All right. Thank you so much for watching.